What's up, everybody? Yo, yo, yo. How's everyone doing? So we'll wait here a couple of minutes for everyone to join, and then we'll start it off. I have a new monitor. So if the stream size is a little weird or if it's slow, let me know. The recording software will also be posted in 2K rendering instead of the 1080p. So once I upload that, I want to see how well it is. Otherwise, I'll go back to the 1440. But otherwise, normal backtesting and Q&A. So if you got any questions, if you want anything that we want to look over from the past week or past couple weeks of price action, you can put that in the chat today. It won't be super long, probably around an hour or less. I've got a longer video I want to record and edit today, so I'm going to prioritize that. But I saw some people posting questions in the trading hall chat. I wanted to go over that in this video regarding order blocks and time. Otherwise, I'll probably just review the startups from this week in a quick top-down manner. Probably just on the 1 minute, and then obviously go over the questions. So Friday was NFP. We had a large range on the hourly chart here. The market maker buy model present. Market maker buy model with the original consolidation on Monday and Tuesday. Reversal profile given on Thursday. Now I mentioned on stream on Friday that whenever you have a late midweek reversal, so around Wednesday or even in Thursday, the weekly profile on the power of 3, Friday's close will typically close in close proximity to the high if we're bullish, in close proximity to the low if we're bearish. Your normal power of 3 will be something like this, right? That's your TGIF range you can use on a Friday, using your higher time frame charts, looking for 20 to 30% for price to then close back into. That's typical when we have a Tuesday or early Wednesday reversal. So if we're looking at something like a Thursday reversal, anticipate Friday's close being very near the high. We're not going to just bounce off and trace down into the levels. News-filled week. We had FOMC and NFP. So tons of news last week that kind of made price action a little bit more difficult to read in the PM sessions. But overall, there was, I think, a setup with the ATM model every single day. So we'll go with Fridays. A little bit more difficult, but not terrible. We had slight SMT with the 10 a.m. news between NASDAQ and ES, I believe. Is it ES? No, YM. There you go. So SMT between YM and NASDAQ. Traded lower, provided a 5-minute candle that printed bearishly as soon as we basically closed that news out. And if you want to go back and watch the stream, you can. But we closed through that bisi over here, which turns into an inversion fair value gap, and then look to go short, targeting. It was this swing low here, which you eventually got it. We got one ticked. We got literally the same exact tick here. I didn't get filled, so I closed it out as I started to retrace in case you wanted to come up and take my stop. Now, the reason I picked this low, people are probably wondering, how is it this low, not this one or this one or this one, is when we have 930 SMT between certain levels and we're going to reverse back down into it. You can look for this in other days too, but we have SMT here between ES and NASDAQ, I believe. So there's your SMT. So this same 844 low, since it was not purged on NASDAQ, is going to be a draw on price. Now, we were trading within the 15-minute and the 5-minute imbalance. So as soon as we tag it into that, that's your ERL to IRL, or even your IRL in premium down into sell side. So premium to sell side, but it was not a time-based level, more of just the AM session low. So traded back down. We had a bearish order block in here, able to use that to go short, and then kind of a high resistance move as we got lower and traded onto all of these wicks here, which I wanted to see a quick acceleration because there wasn't any outstanding for value gaps, but these wicks, I guess, cause a little more high resistance as we continuously swept them, traded back up, swept them, traded back up, swept them, traded back up. Thursday's PA, a little bit more standard. We had a previous day low sweep down into a market maker buy model, both of which were tradable. We had SMT at the highs. You could target the previous day low. Also traded into premium on the 15-minute chart. You go back to Thursday. So premium over here. By the way, T-Trades posted this on Twitter, but if you use your fib tool to pull your premium discount levels, and sometimes it looks like this, and you want to drag it over to the left or right without having to just click the arrow keys back and forth. If you hold shift while you're clicking this, you can actually pull it laterally, and it won't, if I can do it, you can pull it, you can pull it laterally like that, and it won't move, which is extremely useful for taking screenshots and things like that. But anyways, traded back up into premium of that range right there with the SMT at the highs. So if we're in premium IRL, we're then going to target discount or a pool of sell-side liquidity, in this case, ERL. So premium to sell-side ERL, time-based, we had previous day low down here and then PM session low down here. And then going into the 1 minute, both the sides of the curve are tradable. So I think on stream we went short using the macro time. Nice retracement back up into premium here with the fair value gap. So premium FVG here, tags it, and then it sinks off all the way down into there, which is a nice 102, 127 point run. Is it flickering? That may be because of the new software. Let me stop streaming and see if I'll go down in resolution. Not flickering. Oh, so it's like half and half. All right, I went down in there. If it's still flickering, I'll probably just reduce it all the way down to 1080p. Or I have to change my Discord settings. Either way. The recording should be fine. So if you want to go back and watch the recording, it should be perfectly fine. Okay. Okay, I see. And then we had original consolidation up here on the 1 minute chart. And you know, with your time frame pairing, if we have 1 minute consolidation, normally you want to see a 15-minute liquidity pool or imbalance. So if we have an internal range consolidation, you know that this will most likely be a fair value gap that rests above it or below it. In this case, it will be above it on the 15-minute chart. So here's your original consolidation range, and then right above it, you have a 15-minute premium sibi. So we're going from sell side back to premium with ERL present on the 1 minute chart, and then we have a nice market maker sell model, market maker buy model, internal range turtle soup, tap into the order block, and then trading back up. This will be what is covered today in the video. I don't know if we'll be able to post it today. It may take a couple hours to record it and edit it, but it'll be on basically a in-depth guide about the AM session market maker models and how to frame them, what to look for, time-based stuff, as well as how to implement the ATM model with some more psychology and expectations. So it'll be definitely a longer video. Anyways, so someone asked about the order blocks. Question about order blocks in the trading hall chat regarding volume imbalances present within order block ranges. So, is this still flickering? Hopefully it's not too bad. Okay. I don't know what's up with that. It's better. I have some mixed signals. Anyways, so when you have a volume imbalance, I guess when you have an order block range, obviously trending, so order blocks are going to be mostly used in expansions. Breakers will be used in reversals. But specifically for expansion order blocks, when you have multiple down closing or multiple up closing and there's a volume imbalance within price, you're most commonly going to use the last up closing or the last down closing in the range. So if we have multiple candles, right, and we have something like this, and we have a down closing candle range in here, but there's a volume imbalance all the way down here within the order block, price will reach into this last down closing candle, whatever one is right below that volume imbalance, instead of resorting back up into what you normally would draw in the order block as there. I covered this quickly in either a backtesting video a couple of weeks ago or in a live stream, I don't remember. This is covered in, I think, Price Action Model 6 on ICT's YouTube channel. It was a very just quick, like he mentioned it once, and I think he probably released it to the private group as a tape reading skill, but it was not released publicly, at least from my understanding, that he covered it a lot in live streams or anything like that. So if you go back and look at your ranges, I'm trying to find a good example. There's not really any expanding price legs there. Give me a sec while I find a good one. No, I can't find one. Here's a tiny example, but this is an entire order block range, right? You can draw from wick to wick or candle body to candle body, bullish order block. It's common, right? Now, normally you would draw your order block range from up here, which you can. Your more precise entries will be down, so there's a volume balance right in between these two candles. Sometimes it can be between 3 candles. If there's a 3 candle, not between 3 candles, but if there's 3 or 4 candles within the order block range, it'll come down to something like this. We'll cover that next. But you have a volume balance here. Normally you would draw your order block range from up here. Your more precise entry will be down into this last down closing candle. Now you can go back and backtest this same thing in here. Order block range after we close through it, which would be up here, right? You hunt in this range. Is there any volume balances? Well, there's one right here, one right here, one right here. You can extend this out, and this is where price will tap into. Obviously, we have a kind of an overshoot here with the 930 volatility, but it's nothing crazy. It's just an effective tape reading tool when there's an obvious, super obvious volume balance, things like that. But it's not, normally you don't really spot it, or it's not something you're looking for instantly. Yeah, any gap. So any gap like this, volume balance can be used as inversion. Any gap or PD array really can be used as inversion. So breakers, order blocks, fair value gaps, all those PD arrays can be flipped in some way, shape, or form. So even if you look at like a breaker is technically just a inversion order block, but you can also use an inversion breaker later on if price disrespects that. So every single level from the left side of the chart of a market maker model will be used in some case on the right side of the chart. Like if you go back to Thursday's market maker buy model, I'll show you exactly what I mean. So this market maker buy model here, if it's flickering, I apologize. I don't know what more I can do. I can try and go down to 1080p and see if it works. All right. Hopefully it works after that. I don't know what more I can do. So if we look at this market maker buy model just in here, we extend all of the PD arrays from the left side of the chart really quickly. So this premium imbalance will be used as inversion. This is technically a bearish order block, but we're going to count this as old buying. Actually, I'll grab it as a box so you can see it a little bit better. This was a bearish order block. Same thing in here, bearish order block. Fair value gap in here that was used, although it was efficiently filled. So I'm going to, technically it comes all the way down to here, right? But we're going to fill it up into that level. This is a sibi. And you can start extending all these price levels out. How many times do we trade into it, fill it, all that stuff. So order blocks will be your best reference points. I have a whole separate video on advanced order block theory, but as soon as you close basically through a breaker or through a up closing candle range, even anywhere within that market maker buy model, as we close above it, this is in some way, shape, or form a mitigation block or even a higher time frame breaker. So in this case, you could look at a low, high, lower, low, right? So as price closes through that, you can kind of find another entry based on this, a really strong, tight entry. A lot of times your second stage of distribution will happen on a inversion order block level 2. So in this case, we have a fair value gap here, lines up with the bullish order block, and we have this candle range in here too. All that holding price up, and you got a probably 20-point run off of that 30-point run. So if you go back and study this, just find all your market maker model examples and draw out every single PD rate you would use on the left side of the curve. So anything you couldn't go short off of, and then extend it off to the right. And a lot of times you can find clean setups or even supporting factors in the form of a stop loss placement off of inversion levels. So normally you're going to use your stop loss as a 3 PD ray rule, right? If you're going long, you want your stop loss under 3 PD rays on this right side of the curve. When you get more and more comfortable, you'll find areas where you can draw inversion gaps or inversion order blocks and even tighten your stop loss, because that will count as 1 or 2. And then 3 may be this order block or something like that. Like if you're entering on a fair value gap in discount here, so this gap, see that's your preferred entry type. You could place a stop below this order block range and doesn't have to go below 1, 2, 3, because now you have an inversion gap over here plus the breaker, all of which should support price as we climb. Had a question about when we have 2 fair value gaps, one above another, how do you know if it will reach in the second one or if it will just hit the first one? That's a good question. So whenever I'm entering in the morning session, I like to use 2 different entry types, and this will kind of cover the question in a general sense. There's going to be exclusions to that. But if we're looking at just an entry type, there's going to be 2 preferred ones. One will be when you have a breaker. So you have we'll use the bullish examples for most of these. When you have a breaker present, after we have either swept a higher time frame level, a sell side liquidity pool, or even higher time frame for value up, we'll use ERL in this case. So this will be an ERL level in the form of sell side. Your last up closing candle range in this case, as we close through it, will support price. So if we have a fair value gap here, and we also have one maybe down here and down here, you would prefer to enter on the gap that lines up with the breaker. So if it's somewhat overlapped or even right on the premium end, that's the best case. You're going to assume price is going to just enter. You're going to find an entry right on here. And stop loss would either be underneath the breaker or you have to allow for an entry down into these gaps. But you would assume it's not going to reach into here, especially if price action is strong and you have something like an SMT divergence at the lows. Now, so you can assume that we're not going to fill a lower gap. If we don't have a breaker, or if for some reason we're just wanting to reach into discount, your best all the time kind of entries is going to be just finding your dealing range from our displacement leg and looking at whatever the first gap is within discount. Now, this sometimes means you're going to miss entries when it just taps into the breaker and leaves, or maybe just taps into the first gap and leaves, which is something you have to, it's like a tax. You have to just do it. You have to do it. You're going to miss out on entries. You're going to miss out on trade ideas. That's just part of the game. But most times your preferred entries are going to be in a short-term dealing range discount or premium. And you're going to feel better entering on this gap than you would if you had to enter on here, place a stop tight, which probably means you're using too large of a position size, or you have to just place a stop all the way below all these gaps instead of just keeping that stop loss tight if you were to enter down here. There's going to be exceptions to this rule. Something like a breakaway gap has its own rules, and breakaway gaps and spotting breakaway gaps and anticipating when they're going to be used comes with just experience of tape reading. I guess the general rules will be if we're in a consolidation range, normally the first gap that's printed as we displace out of the consolidation is going to be used as a breakaway gap normally. There's going to be exceptions to that rule too, but in this case you have a breakaway gap here. I'm trying to find the examples. Or if we're reacting on a higher time frame level, like a 15-minute level, sometimes you form a breakaway gap like this down here, and price won't come down to fill that. But breakaway gaps is more of just a experienced tape reading tool. If you watch price action for probably a couple months, you'll get used to just filtering those out of your analysis and filtering those out of your view. Like if I'm looking to go long, I'm not even counting this as an entry point normally, unless there's like a giant wick below us. There's a few volume balances in the order block. Would you use the lowest one? I would use the one. I would say if you could split the order block range into premium and discount, and if you're bullish, use the one that's the lower one. So yeah, if you're bearish, then use the highest one, especially if it lines up with a fair value gap or something on the left side of the chart. Can I also ask your correct settings here in TradingView? Is your break even adjust enabled or not? What is the use of this? Because sometimes I see that price on your chart during a live here that candle already mitigated on fair value gap. On mine, it didn't mitigate a fair value gap yet. Okay, so I use the current contract expiration date. So in this case, I'm using the June expiration. This is what ICT taught to use in the 2022 mentorship, and I've just stuck with it using the current contract. If you type in NQ, in this case, you have a drop down of the current contract, the future contract, and then all of the months, the monthly expirations. So I just use the current monthly expiration, which you don't need to use the be adjust on the bottom. Only annoying part about this is then you have to manually switch it during expiration dates, which isn't terrible, but it's just a habit that I've gotten used to. If you don't want to switch them, or if you just want to use NQ exclamation point, if you type in this one, this will automatically switch your contracts before the expiration. And I have the be adjust on. This will adjust for contract changes. I think between the contracts, I'm not sure the exact use of it. I'm pretty sure you want to turn it on though. But if you don't want to worry about gaps being mitigated or not filling, then choose the current contract. And then you have to look at something called barchart.com. And when we get closer to June, you're going to look at the volume between the current contract and the future contract. So if we're looking at NASDAQ, it'll be between M and U. So this is the September expiration. So as soon as we get closer to this expiring, you just want to switch over to U. And normally something like NinjaTrader or Tradeovate will automatically switch for you. But if it doesn't, you got to make sure if you're using a third-party software to place trades on a prop firm or something like that, that you're switching over, because it's either going to have an extreme spread, which is going to be detrimental if you're trying to be in a market as liquid as futures, or you're just not going to get filled. NASDAQ as well, this actual current futures market is going to have different price action from something like US 100. So if you're using something like US 100, there's going to be a lot more volume balances normally, and gaps may or may not be filled, or it's going to form too many. So if we go back and look at this price action, sometimes there's also more wicks. So you got to be careful when you're using a chart outside of the actual paid data subscription. Which change in state of delivery would you consider more valid as for changing bias, a 5-minute CISD in an entry in the 1-minute second stage of distribution, or a 1-minute kind of unicorn? That's a good question. I would say the best ones will be your 5-minute to 1-minute. So if you have a 5-minute order block or change in state of delivery, that's what you're going to prefer to use. Obviously, that's going to be a probably later entry, so second stage of distribution in the curve. A 1-minute unicorn. So if you see a 1-minute change in state, there needs to be context around it from a higher time frame. So the reason we're able to trust a CISD like this, and there's nothing on really this 5-minute chart. Oops, that's 15 on the 5-minute chart. until we close through here. So the 1010 candle. Is because we're reacting off of a daily fair value gap, plus we had SMT, plus we had the time lineup. Like we had 10 a.m. forming the high there, and then you would expect it to continue into lunch or even into 10:30. So it really just comes down to what is the context and the framework given on all the time frames that you'd be using to trust a CISD on the 1 minute chart. But if you want to just remove all that noise and just go right into it, then use the 5 minute CISD or a 5 minute order block, fair value gap, whatever it may be, being respected. That's why I use a 5 minute filter candle. So we have to see a 5 minute close in that direction most times, and then either disrespect PD arrays that should hold it up, or holding PD arrays that should hold, and then you find a 1 minute entry off that. Breakaway gaps formed a lot on the 10 a.m. or 10:30 reversal. Yeah. Anytime we're reversing off a time level, and especially when you have something like a 10 a.m. reversal, this is coming off a higher time frame PD array, you're going to see a breakaway gap form here. Same thing if we're consolidating up here and leaving aggressively from premium or discount, breakaway gap forms. Here's also your 1 minute change and save delivery, especially if we're holding order blocks. Now, if you want to also find a really solid entry, say you missed the breaker entry, whatever order block that trades into the breaker. So if we have a breaker in here and price comes down and trades back up into it and leaves it, this up closing candle, as price trades into that, normally you can find this is a very, very strong order block, the one that taps into the breaker and then leaves it and creates a gap or an order block off of that. So you can, so I drew it out on the stream. This order block is pretty strong. Obviously, as we leave it, order block range for value gap, another shorting opportunity there. This order block was also formed within an inversion for value gap. So anytime you see order blocks form within a gap or within an inversion for value gap, those are also pretty strong as long as the order flow and the bias is counter whatever that gap formed in the first place. For CISD, if it has large wicks, you need to see bodies to close below it, or only the body of the CISD matters. I would say best case scenario, preferably it closes all the way through the wicks. Most times I'm just looking at the candle body though. Like if we see candle body close through the other candle body, that to me is more important than, if it closed within the wick. Maybe just be a little bit careful the next two candles, make sure we're still getting a bearish reaction. But I'm mostly looking at the bodies closing past the previous bodies. Wicks will give you the entries, and the bodies will tell the story as where price is going. When 930 completes a market maker model, what should you look for in the macro time? I consider it low probability and left the charts. If you can find a day where that there's a good example of that, I'd prefer that. But if 930 is completing a market maker model, then normally you want to look for a later entry time. So probably post 10 o'clock, maybe between 10 o'clock and 10:10. It also depends on the news profile. But if you get something like a 930's opening and just displacing aggressively, normally this also creates a reversal profile that you can use to get in closer to 10:30, and you'll see 10:30 put in the high, or even 11 o'clock. There was a video, I think on YouTube, that same exact profile happened. Let me see if I can find it. If you go into one of the streams, it was probably in March or April where we had a reversal. I'll see if I can find it later and I'll send it to you. I'm not going to look it up right now. But I would say assume that there's going to be a secondary market maker model. The time that 930 completes a market maker model and we have 830 news, then you got to be really careful. Probably wait for later into Silver Bullet, maybe around 10:30 to find an entry. If I see ERL to ERL and no IRL, it means we are reversing on a higher time frame. I would assume so. Technically, it always goes from ERL to ERL on a lower time frame. But if we're going instantly from like London high to London low within the AM session, and we're displacing through that London low, then yeah, you can assume we're probably reversing on the higher time frame and looking at the reversal from the weekly market maker model perspective, right? Because every week from Monday to Friday, you're going to either complete a previous week's market maker model, or you're going to start and finish a fresh one. So in this case, we have a market maker buy model here. Go back to Friday to Monday. Here you have a completion of the market maker buy model from the previous week, right? Original consolidation up here, and then eventually climbing up, and you have a reversal profile as we continue all the way up towards this buy side, which we had SMT between ES too. That's a good point though. If you see ERL to ERL. Now you're going to be looking for the weekly reversal most times between Tuesday and Thursday. And you can also anticipate that by the economic calendar. So if you only have news on Thursday, say the 8:30 news is only on Thursday, we have no news up until then, assume that Thursday is going to probably create the reversal, or you may have a consolidation profile up until then, and then Thursday creates the reversal, and then Friday will close near the high because Thursday is reversing. If you have Tuesday news, maybe another Thursday news, then you can have your standard profile. But normally for a weekly profile, you're going to have 3 market maker models. It's going to be a standard classic Tuesday, maybe early Wednesday reversal, kind of an expansion week on the weekly chart, consolidation into reversal, or you're going to have kind of a choppy range up until Wednesday, and then Wednesday can create the higher low of the week. And I think if you go into core content month 7 or month 10, I think it's month 7, that he describes the weekly and the daily profiles. What do you think on our calendar for this week? Not much news for USD. Let me take a look. Oh, perfect. So we have 8:30 news on Thursday, Friday, 10 a.m. So this is normally where you got to be careful on Monday and Tuesday. Monday especially. So tomorrow there won't be any stream, but most likely going to be weekly accumulation on Monday, especially since we already kind of reached into a higher time frame level on previous week of Friday. There's no reason for Monday to continue in price. I would look for probably consolidation profile on Monday. Tuesday, we could see maybe the start of the Judas swing, Wednesday reversing, but either Thursday reverse or Wednesday will reverse. And you'll see that Thursday news continue in our direction. Now we got to be careful of quarterly shifts too. We put in that low kind of last week of April. Normally you want to see around last week of April and early May. But as long as we continue to climb through this inefficiency, then you'll see new highs probably by June or July. We also swept out that 60-day, I think it was 40-day, you have to look back from here. Yeah, 60-day look back from that sell side. Also into short-term discount from this dealing range here. I think we had SMT. Do we have SMT? Yeah, so SMT also between ES and NASDAQ on the higher time frame. So looking good for a reversal. But overall, has it flickered since then? I'll try and figure that out by Tuesday so it's not annoying for the weekly stream. We have a 1 hour breakaway gap prior to an order block. Do you think it's unlikely that we fill that gap before looking for new highs daily volume bounce? Let's take a look. Yeah, I don't think, unless we're really bearish, I think this gap will be left open. I think this gap will be left open. This 830 inefficiency from NFP may be traded into, but as long as we're still bullish, I think this gap will be left open and this one. That's kind of a deep retracement into discount Just to go all the way back there. Or like visually, if you saw price come all the way down into this. And then all the way back up further. Unless we were bearish for the short term, probably into Monday or Tuesday, then it's possible. But this gap for sure, I think will be left open unless we're going to reach down into the sell side below that. This is the only inefficiency that is maybe will be filled. I really strongly believe that this one will be sometime next week. Video quality a little low. Okay. Yeah, I'll try and sort that out. Let me screenshot the news for next week. We have 10 a.m. news on Friday too. So if I'd assume what days the model will form on, I would say you could look at Tuesday, Thursday, and Friday. It's probably the best setups for the week. Reason being, Wednesday will be right before the 8:30 news, so you can see kind of either the theta or beta profiles, choppy price action for that, and then Monday will be weekly accumulation. So take it slow on Monday tomorrow. We may have actually no, we probably won't have a stream tomorrow. For sure we won't. I've got some things I got to do at 11 o'clock, so we'll have a stream on Tuesday, Lord willing. We'll go ahead and wrap. Today's up 48 minutes. Wanted to keep it a little bit shorter. We'll have another backtesting stream sometime next week, so I'll make sure to send the poll out there. I'm going to go and record the market maker model video for hopefully today, but probably Monday or Tuesday I'll be done editing it. So I appreciate all you guys joining, answering some questions. I will see you guys on Tuesday if you're in the tier 2 for the stream. Otherwise, I'll see you guys on the next backtesting stream, either probably sometime next week between now and next Saturday. So enjoy the rest of your Sunday. Take care and stay safe. Peace.